Hey, it's Matt Durbin here with eXp Realty, and today we want to take a look at what's happening in the Pittsburgh real estate market in the fall here. It is September of 2025, and we want to take a look at what's happening around the country from a national level, and then we also want to really dive into some local level stuff and just kind of show you what's happening here as we enter the fall. We're going to start by taking a look at for sale inventory here, and this website gives us a pretty good idea of what's happening all around the country. More importantly, as we see national housing news, we're kind of lumped in with all of these other areas. And so while what's happening in, let's look at Dallas, for example, where inventory levels are at 30,000 homes for sale, when in 2017 there were only 19,000 homes for sale. When we're looking at some places like that, or we might be looking at a Miami, let's say, inventory levels are up well above where they were at kind of pre-COVID levels, which is what we're really looking at. Let's look at what's happening in Atlanta. They're going up and down. They're back up where they used to be. Let's look at this Austin market. They're up, 150% of where inventory levels were pre-COVID, which is really what we're looking at, because almost every market in the country inventory levels dropped during COVID. So now let's look at Pittsburgh, for example. 2017, the Pittsburgh metro market had almost 10,000 homes for sale. And we reached a point where we only had 3,900 homes for sale. And when you're really looking at inventory levels, we're still not back to a normal market here. And so while we might hear about home values declining, market crash, real estate market crash, this is one of the reasons why we're probably not going to see anything. Could we see a flattening? Could we see a home value just tightening, or maybe slight depreciation, slight appreciation? Yes, but we're not seeing the kind of inventory gains that some of these other areas are. Let's look at it from a county basis, right? So we've got Allegheny County, same thing, same trend. Washington County, same line, still not back to that trend line. Westmoreland County, still not back to that trend line. And so as we start looking at what's happening in our market, which direction are we going to go, we really want to look at inventory from the jump. If there are more homes for sale than there are buyers in the market, then home prices will tend to flatten or decline. We're not seeing that yet in our market. Let's take a look at home values as a percentage. Where are things really shooting up or down? So what did we see? We saw inventory levels way up in this like Miami, Fort Lauderdale market. So what are we seeing? We're seeing values go down. Inventory levels go up, home values go down. We saw the big jumps like 2021. We saw obviously the home price appreciation. Where are we seeing now? We're down 3.6% year over year. Let's look at Dallas as we look at the same thing. Inventory levels way up, home prices starting to decline. So we've seen depreciation in two of the last 3 year over year markets. Now let's take a look at what's happening in our market. This is a Pittsburgh metro area. So we start looking at home value growth as a percentage, flat line, negative 0.3, 5.2 year over year in 2024, once again, and 0.9 July of 2024 to July of 2025. So what are we seeing? Things are starting to kind of level out a little bit. Let's look at the average home value in the Pittsburgh market. Steady increase. We saw these jumps. We saw the big jump in 2020, 2021, and now we're starting to level back out to that couple of percent appreciation, just like Pittsburgh has done over the last so many years. So let's take a look at county, or even let's go down to zip code. Let's dive into this market and see which of our local zip codes are up and by how much. So some of these areas down, declining markets. Some of these areas up. 15026, that's that Imperial area. Moon Township's up 2.9%. 1.317, Cannonsburg, Peters Township, that's around 1%. Washington, 1%. Let's see where the city is. Depreciating. So a lot of the city right now is on a decline. And so really, we got to really look at the local level. Where are we at depending upon the area and location that you're in? This is 15632, 15668, up 7.6%. 5 that's export Murrysville area. Let's look at, this is the Irwin area. Where are we at right now? So we're up 3.2% year over year. So we're still appreciating in those markets, and I'm willing to bet we probably don't have quite the inventory that we have in a lot of other places. And so as we start to look at our local Pittsburgh market and the conversations that we're having with buyers and sellers right now, is we got to look at the area that we're in, the school district that we're in, the locality that we're in, the neighborhood that we're in. Real estate is local. And so while you might have this one, this particular zip code 15345, we're down 7%. And we have another one over here up 5.7%. So on the average, we're kind of flat, but we have some markets that are going up and some markets that are going down on a more rapid pace. So let's take a look at what's happening with days on market. Let's get a good history here of what days on market has been. So slowly creeping up. Back in 2017, the average days on market were nearly 70. A normal market, we're between 2 and 3 months worth of inventory. So we're still on the low end there. We're almost at 2 months worth of inventory, not quite there. So depending upon the market, we may have a little bit more of a seller's leaning market. In other areas, we may have a little bit more of a buyer's leaning market. And that's something that we really need to look at. If you're a buyer considering buying right now, these are things that we're going to talk through. We're going to make sure that we're aware of what's happening in your local market or the areas that you're looking in. And from a seller standpoint, we're going to have that same conversation. Let's take a look at what's happening to the 10-year Treasury. We know that interest rates tend to kind of follow along the 10-year Treasury on a long-term basis, and it's been hovering around 4% now. We saw improvement to interest rates last month. And so while we were hovering around mid sixes when it comes to conventional financing, we started to creep down. We're starting to see more low 6% range for conventional loans. And we're seeing more high fives for your government loans, your VA, FHA financing, things like that. So we're seeing 6.25%, 6.3, 6.28, things like that from conventional financing. So we got a little bit of a reprieve from the mortgage rates, and we're starting to see them dip down a little bit. We have a Fed meeting coming this Thursday where they're fully expected to at least drop the Fed funds rate by 0.25%. However, most indications are that's already been built into mortgage rates. So will we see a big dip in mortgage rates? It's unlikely. I think the percentage last time I checked was over 90% chance that they're going to do a 0.25% drop to the Fed funds rate. So we'll keep an eye on that. And a quick update, like kind of what we're looking at and what we're seeing and what we are, the conversations that we're having right now with home buyers, right? So you saw there's some markets are appreciating, some markets are depreciating. Also, when you really start to dive into a local level, you really need to look at price point as well. And so some buyers, they're seeing, okay, I have a lot to choose from. I can negotiate. I have more ability to negotiate. I can build in seller assist. I can do some things like that. And while others, it may still be multiple offer scenario. And so it's really going to depend on your price point, location, all of these things, what type of home you're looking for. But one of the things that we're really try to utilize in terms of the buyer side, right? If we have the ability to make offers and negotiate again, which we didn't have for a long time, a couple of years in this market, we didn't have much room to negotiate. So sellers were getting what they wanted. Now we can start to build in seller assist. We can start to build in some closing cost assistance, maybe keep that cash in our pocket, and that helps us update a kitchen or update flooring or paint walls, things that we need to have done that maybe we might not want that house because it doesn't have all the bells and whistles that we really looking for. However, if we can keep some of that cash in our pocket and utilize that and use that toward home improvements, that's a way to look at things. The other way to look at it is, can we use some seller assist and we do a rate buy down? And so this is a conversation that you have with your mortgage lender. And we're looking at some of these things right now where if I could get a couple of percent back in terms of seller assist, can I use that towards a rate buy down? How much will that improve my monthly payment? And how low can I get that interest rate in order to make this home way more affordable than maybe it was a year ago? So we're looking at that from the buy side. On the seller side, we really need to look at the active competition, where most of the time in previous markets, or at least over the last couple of years, we're looking at what has sold recently that's comparable. Obviously, we're still looking at those things. What's sold over the last 6 months, 12 months, year. And then we were pricing a little bit more aggressively above where those things sold. If it sold 12 months ago, maybe we would be pricing 5% above that. In today's market, however, 12 months ago was a different market than what we're dealing with today. Things are slowing down a little bit on the seller end. Are we still getting some multiple offer scenarios in certain markets? Yes. Are we getting less showings across the board? Pretty much, yeah. So a market like we're in right now, we have to be pricing a little bit more aggressively. So we're looking at what's active, what's our competition, what's on the market today, what's contingent, what's went under contract, what's pending, how quickly did they go under contract, how long were those homes on the market, did they do price reductions, things like that. Did it sell in a weekend? Did they get multiple offers? Now we know there are more buyers in the market, so we can price a little bit more aggressively. And so where in the past we're looking at past sales data and really using that for our pricing strategy. Today, we're looking a little bit more around active competition, how quickly homes sold on the market, how quickly things went under contract, and we're putting together a good strategy around that, knowing what else we have. Can we take advantage of the market a little bit more? Can we not? Do we have too much competition and we have to price it a little bit more aggressively to attract attention? These are the conversations that we're having right now as far as home sellers are concerned. As always, though, if you're considering buying, considering selling, reach out to us. Let's talk about the market that you're in. Let's talk about the neighborhood, locality, school district, whatever that is. And let's put together a good game plan for how to proceed forward in the market that we're in today. If there's anything that we can do, any questions, you want to see your local market, you want to see an update, anything like that, please feel free to reach out to us anytime. We're here to help. We're in this market every day, sell a couple hundred homes a year, and we can certainly guide you throughout that process. So hopefully that stuff helps. Hopefully that market update helps. And if there's anything we can do, reach out to us. Thanks.